Hi, good morning, good day. Welcome to Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screen, and maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is every day the same, quick and smart. So let's have a nice start like every day. And today it's Tuesday, 12th of March 2019. Welcome to Admiral Markets. Of course, we will start like every day with our risk disclaimer. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you like to read the full risk disclaimer or anything else, just visit admirmarkets.com, for example. You will find the long version there. Also, still one of the topics of the year 2018 and maybe still for 2019, the different offers and options for retail clients and professional clients. Also, there are some more information on our webpage like admirmarkets.com. This is our scheme. On Monday, it's Jay's day. On Tuesday, like today, it's Paul's day. Wednesday, it's Giancarlo's day. Thursday, it's Marco's day. On Friday, it's Dick's day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, DAX 30 typical spread of just 0.8 points without additional commission, or new since last week in our active trader account, Admiral Prime, 0.2 points only plus commission. Check it out on admirmarkets.com, some more information about it. And of course, Forex, $0, 0.6 pips typical spread without commission. Like said, admirmarkets.com for all more details. And one word, global offers. If you'd like to check out also what we are doing globally, yes, we have offices in Chile, we have offices in the European Union and also in Australia. Everything about that on admirmarkets.com. Enough from my side. Now it's time for Paul. Good morning, good day, Paul. What's your view to the markets today?
Good morning, Jens. Good morning, everybody. Nice to be here. Here we are, Tuesday, the 12th of March. Thank you for the introduction, Jens, as always. And today is, as like many of the Tuesdays we've had over the last few months, is a big day to vote on Brexit. So what does that actually mean? Well, I'm hopefully just going to try and put up a slide here that will help sort of explain it quicker and better than anything else. I hope that you can see that slide there. Well, for today, I've got to say thank you to the BBC, which is where the diagram came from, and I'll explain that in a moment. But today, what we have is the vote this evening on Mrs. May's deal, and what we saw yesterday at the sort of 11th hour was Mrs. May going to Strasbourg to sit down and have a chat with Mr. Juncker and the European Union about a sort of a compromise on the Northern Irish backstop. And at the Strasbourg meeting, they've come away with a little bit of a joint statement, which supposedly amends the political declaration on the UK and EU's future relationship, and it also has us committing to replace the backstop with alternative arrangements by 2020. What those alternative arrangements are, we wait to see, but this is for kind of legally speak at the moment. And it also what it allowed is the EU allowed them to sort of say that they had not made any changes to the deal that had been agreed, but that it was just merely clarification. So what does that mean? Well, actually, what happens is this afternoon in the UK, there'll be I think a statement from Mr. Cox, the Attorney General. Then also there'll be a debate about the arrangement or the agreement in the Commons, and then there'll be a vote held this evening. And this is where this sort of chart, and as I said, I have to thank the BBC for it. It explains it clearer and better than I could with a few words. That vote will be this afternoon, okay? If that vote is passed, okay, and remember, this is the vote she lost by 230 votes when she voted on it in December. It would be a change of almost historic proportions if it were to pass this afternoon. Or this evening rather. At the moment, there's been hints that there's some people coming round to it. Whether that's enough to sort of change the defeat that she had last time, we will wait and see. But were it to pass, well, then the UK will leave the EU on the 29th of March with that deal. If tonight's vote fails, well, then tomorrow, in Wednesday, they're going to have a vote on no deal. So if today's vote is rejected, then tomorrow's there'll be a vote on to leave without a deal. What we'll find is that whilst there has been increasing interest for within the people for a no-deal exit, MPs will not go for that, okay? MPs will not have that. So the likelihood of that passing is very remote, but were it to do so, the UK would leave on the 29th of March without a deal. But as I said, it's very likely to fail, in which case then on Thursday, then there will be another Commons vote on delaying Brexit or extending Article 15. If that vote fails to pass, well, then the UK leaves without a deal on the 29th of March. If it does, well, then the PM will need to request an extension from the European Union. So it's a little bit of a, we've got these next 3 days, there's a little bit of, call it a little bit of a tangled web there. There's a few different routes that could actually happen. And what we might see by the end of this week, or by the time I speak to you next Tuesday, is a very, very different landscape, ladies and gentlemen, a very different landscape. Whether Mrs. May will still be in her job will remain to be seen. I think she will hold on to it for as long as she possibly can. Will we leave with a deal? Will we leave without a deal? Will there be an extension? Well, the next 3 days are going to sort of tell us that. And as I said, by the time I speak to you next Tuesday, we could be sat in a very different landscape. All of that has an impact upon the sterling and the euro. So let's try and switch across to that now. So hopefully we can just switch across here. There we go. So I'm just bringing up the Admiral Markets MetaTrader 4 Supreme edition. Hopefully that you can all see it there. So not surprisingly, what's happened? Well, here I have a British pound profile. Okay, hopefully you can see it down there. And as I said, this is what I have for quite a lot of the currencies, just a profile set up just to look at a specific currency, which I find helps give me a very quick snapshot of what is going on in the markets. So what I've got here is top left, pound against the dollar, euro against the sterling, pound against the Canadian dollar, pound against the Australian dollar, pound against the Japanese yen, pound against the Swiss franc, pound against the New Zealand dollar, and at the bottom right we've got the FTSE. All of those are on hourly charts, and hopefully you can see, as news that yesterday came out that Mrs. May going to Strasbourg, that there actually might be a clarification rather than changes to the withdrawal agreement. Well, hopefully you can see that what we saw was a particular real strength coming to the sterling. Sterling really sort of picked up in strength. You can see it there, and we'll look at pound dollar in particular a little bit in a moment when we go through the FX majors. But we can hopefully see that the markets felt that that the likelihood of Mrs. May's deal being passed has gone up, and in which case there has been like a bit of a flush into to sterling. Now this morning we've seen there's a little bit of double tops going on there, and that's not surprising, because what happens is clearly there'll be some traders who will have taken their profits from their long sterlings from yesterday, and as we go into today, where we will see let's say argument and counter argument and a fair degree of debate in the comments, and as I said, we're also waiting for I think a comment from the Brexit Secretary and also from Mr. Cox, the Attorney General. Well, undoubtedly we will see swings within sterling over the next 36 hours, but actually, in fact, probably near the next 72 hours, but also actually over the next sort of 8 to 10 hours. So if you are a trader of sterling over the next couple of days, my advice is to just be very, very careful. Ensure that you manage risk to its before everything else. So it's first and foremost, make sure that your risk tolerances are probably dampened down, because I suspect we will see an element of volatility, and you need to be aware of that. But as you can see, sterling strength across the board there, right? But today we will have an interesting and rather sort of volatile trading period, which kind of takes us on. Let's have a chat about the sort of the rest of those majors and how what if any impact that is having upon us. This is just waiting for their charts to update there. And what we'll see here is, as always, this is the dollar index. Okay, those of us trading FX, we need to be aware of what the dollar's doing. Those of you who are just joining us, okay, for maybe the first time, my charts are quite simple. They have a green and blue, a green and red, bullish and bearish candles, a blue 20 period moving average, a red 50 period moving average, a green 200 period moving average, fractals, and then also some drawn on either lines of support or resistance, or in particular patterns that may show up. If you wish to know more about that, then by all means you can check out the Mastering the 4 M's of Trading webinar, which is run every Monday afternoon London time at 4 o'clock. There's also a fantastic archive above those sessions in the Admiral Markets YouTube channel and also on the Admiral Markets Global Facebook page. But when we look at the dollar index here, what I just want to draw your attention to, remember we talked about was the possibility of a head and shoulders building. We had a trade a couple of weeks ago on that. But we said, we were going to leave that because we saw dollar strength was coming back in, and we can see it here. And just what's curious to me here is this here last week is, we had that dollar close, very strong movement. What kind of gets me interested is that was the strongest weekly dollar close for almost 2 years. Okay, it's not really up until around about April-May 2017 that we have seen a weekly close on the dollar that's at those particular levels. That is, the message is for this moment that we have a strong dollar in play. My own personal view is that actually the world needs a bit of a weaker dollar to make the wheels go round and to make sure that we don't find ourselves in deeper economic trouble. But what I want and what the markets do, they're not always aligned, ladies and gentlemen. So I just have to trade what I see. So if we just look there on that daily chart, as I said, we saw, we were short the dollar index, okay, and then actually what happened is here we had a key day reversal, and those of you who join me, we sort of stepped aside from our trade. If you're not sure what a key day reversal is, then as I said, please go and check out the Mastering the 4 M's of Trading webinar archives. We talk about that as a particular trading setup, and actually what we can see is we've bullied our way up here, and then towards last week, but actually we've just dropped off back into that level, and this kind of is of interest to me as we start to look at the euro dollar. So euro dollar is a very popular trading instrument here at Admiral Markets. You remember, those of you who join me every week, we talked about how it was almost like a descending triangle that we had seen sort of building here on the euro dollar, reflecting dollar strength and euro weakness. And we talked about it, how the 20-period moving average had acted as pretty significant dynamic resistance. Every time it tried to get above it, next week it got knocked down. Okay, it comes up, gets knocked down, comes up, gets knocked down, tries to come up, and then what did we have last week? That's big shunt in dollar strength. We also had an absolute drop down beneath that 113 level. The 113 level and the weekly 200 have been very significant support levels, but actually we broke it and we closed beneath it, and we've not closed that low in the euro for a good period, okay, for once again since about June 2017. All right, so we were getting towards 18 months to 2 years since we've seen a weekly close, and I think these are all significant, and now I'm wanting to see will that close hold, and where is there a trading opportunity for us? So if I just go down to the daily chart, ladies and gentlemen, hopefully that we will update that. What we can see is, as I said, we have a real strong close beneath 113, and here's your first trading idea for today. Is that what I'm doing is I expect price to sort of rally back up to this area, this 113 area. It's a big round psychological number. The daily 20-period moving average will be into there. We can see that there's been price reaction there every time it's been there. So I'm going to be sat here waiting to see what price does when it gets to this level. If price moves up to here and then starts to put in rejection candles, so that might be like a key reversal candle, an engulfing candle, a rejection candle, or a pin bar, then I'm going to be intrigued and interested to start to sort of create a euro short long dollar position. So I'd be looking to be short euro dollar in around this area, around about 113, based on us seeing sort of bearish rejection candles there. So just take an eye on that, keep an eye and watch on that. Okay, it's going to be a key level. Because if we get up there and drop down, well, then that sort of kind of continues that story of dollar strength. And that dollar strength story, well, that just plays out when I look at the dollar Swiss franc. Okay, very quickly, here's the weekly chart. A bit like the dollar index, a bit like the euro dollar. You can see there on the weekly charts that we actually, once again, we've had our sort of strongest close there for going back till around about sort of April time of 2017. So weekly closes, they can be pretty, they can be pretty illuminating. Okay, we've had that first close up there, okay, for about 2 years. So now I want to see, right, well, what does price do? Does price base itself here? In which case, then I'll be looking for a move up towards those recent highs back at the end of 2016, 2017. Or will we get a false breakout? You can see here a couple of months ago we had that, and we had a nice false breakout there, a big rejection candle, and that gave us a nice short trade for a few months. So or we're at an inflection point. We're at an area where we might start to see things moving. So, you know, it's a case of let's keep an eye. This is going to play out over the next week or so, I think, and that is going to provide us with opportunities. That said, I said we'd have a look at pound against the dollar as part of the, you know, looking at the majors. Well, you know, you can see once again, weekly chart here, okay, after the false breakout at the end of last year, we've had, you know, it's not been an easy ride, but, you know, we've had a little bit of a grind north of sterling sort of strength, okay, against the dollar. That's just been a reflection of a possible deal. We talked about here a couple of weeks ago about how, you know, the sort of the power of the 20-period moving average here, it had acted as resistance, quite nice resistance, you can see that. Now it was acting as support. If you want to know more about that, as I say, check out the Mastering the 4Ms trading webinars. And then we had a push up, and actually over the last couple of weeks we've had a little bit of a move down. Remember, this candle hasn't completed, okay? So if I go down to the daily chart, you can see there on the daily chart, false breakout followed by a bit of a grind its way north. What had happened is, you know, yesterday we came down, and what's happened is, you know, as we got that Strasbourg announcement, we had a nice bounce here where the daily 200, the daily 50, the 130 level, all acting as very, very significant support. We've had a real strong bounce. That is a key reversal there. Remember, prices pushed to new lows, but actually the buyers have stepped in, bullied price all the way higher, and actually it's, you know, we've closed way above the high of the previous day, and in fact the high of the last sort of 3 days or so. Normally it's a very, very strong bullish, you know, indication. I'm going to be looking to be a buyer, were it not for the fact that we're about to go into these couple of days of you know, rather interesting debates and votes. So I'll be watching this. I'll be watching this like a hawk to see if there is an opportunity for me over the next sort of 48 hours. Be interested to see if price sort of comes down to around about 131, but you know, in that area, and sort of starts to put bullish candle patterns in. But, you know, as I say, if you're trading sterling this week, take great care and ensure that you know, always, you know, have excellent risk management in place. Very quickly, we looked at dollar CAD a couple of weeks ago. Remember, we talked about how price was coiling up, all right? We talked about how price was trapped between the daily 50 and the daily 200. Price was just coiling itself up and getting ready for its move, and that's what happened, all right? And then we saw, once again, it's just reinforcing the story of having a bit of dollar strength. Furthermore, we've also, because of some of the allegations in Canada, and perhaps Mr. Trudeau is on his last legs as the Prime Minister there, that's invariably going to weigh a little bit on the Canadian dollar. So it's not surprised we saw dollar strength, Canadian dollar weakness, and we had a pop north there. Now I'm just waiting to see, is it going to hold above 130, where we've had a bit of movement in the past? Will it hold above that? That might give us an indication of, once again, a bit more weakness in Canadian dollar and a bit more strength in the US dollar. So I'll just briefly finish up with a couple of the, you know, here we have the DAX, very popular trading instrument for Admiral Markets customers. Here, as always, weekly chart. Remember, we talked about maybe an inverse head and shoulders pattern building. Okay, it's another pattern we've covered on the Mastering the 4Ms webinar. And what we've actually here is, you know, price has got above the weekly 200. At the moment, it's just about holding on. We've had this sort of resistance, which became support around about there, sort of 11,450 zone. We can see it's holding there. And if I go down to the daily chart, what I was interested to see is, you know, we've had a, you know, a grind north there. You can see it yourself. We had a little bit of a reversal, but we had a 3-bar reversal here, pattern show up at the end of last week, bounced off that 11,440 area, 11,450 area, bounced off the daily 20-period moving average, and we had a nice little trade there. And on a longer term trade, I'm actually looking to sort of see if we can maybe sort of see some continued sort of move forward with that. And actually, but, you know, on an intraday basis, we see that, you know, we've had a little bit of a bearish candle there, and actually I'm going to be waiting to see, you know, will price move down to around about that 11,500 area. That's what I'll be looking for. If there are continue to be sort of bullish sort of candles there, bullish rejection candles, well then actually what I'll be looking to do is to re-establish along around about that 11,500 area, based upon seeing good bullish candles there. So maybe a bullish pin bar, a bullish engulfing candle, maybe a bullish Q reversal candle. That would give me the sort of kind of indication for what we have there. So there you go, Jens. We sort of flew through quite a few things there. As I appreciate it, it's a busy day. We've got a busy week there. If we have time, I'll take any questions. Otherwise, I wish you all the very best success in your trading.
The time is always our limit, but one final question for today. Late evening today, new voting about the UK Parliament about Brexit, so what's going on. And one question from one participant, what will happen with British pound if there's no deal Brexit? Leave. Is it good or bad for British pound? That would be the last answer for today. I hope for your answer. And yeah, tomorrow is another day. We have 5 days a week, 5 different traders. So if you like that series, join us tomorrow with a new day trade. And if you'd like to see and watch it again in a couple of hours, it will be available in our YouTube channel. Just go to youtube.com/AdmiralMarketsFX. Greetings from Berlin office and the last 1 or 2 minutes by Paul.
Yeah, absolutely. So, good questions there. Okay, yes, the Brexit vote. The first Brexit vote is this evening. As I was saying, we're going to have volatility, so I'd be very, very careful about trading that on an intraday basis. But the second part of that question about what would happen if there is a no-deal Brexit. Well, I think the initial response would be that there would be a sell-off in sterling, right? And that would be the knee-jerk reaction, that there would be a sell-off in crossing sterling. But I don't personally think that the sell-off in sterling, whether to happen, will be as deep and as strong as people are talking about. Some people are talking about how sterling against US dollar might drop down to sort of the 120 region. I personally don't see that myself. I personally don't see that. I think yes, there will be a knee-jerk reaction and a sell-off, but I don't think it'll go as deep as people will think. And actually, here's my own little thought. My actual belief is that one of the biggest buyers of the sterling might actually be the ECB, might be the European Central Bank. Because why would I think that? Well, because they will not want the sterling to weaken massively against the euro, because that would make European exports to the UK more expensive and would make the UK more attractive for selling its own exports across to Europe and across to the globe. So I think the knee-jerk reaction is a sell-off, but I actually don't think it'll be as deep, and we actually might start to see then a turn and a move ahead, because people will have a bit of clarity and know where they stand. There you go, Jens. I hope that helps. Hope that helps you all. Best of luck in your trading this week, ladies and gentlemen.